Hello guys, welcome to the Trading Parrot. I've been meaning to record this video for a long time, possibly around a month, that I don't do a ratios chart analysis. This analysis takes in consideration gold, the VIX, Nasdaq, DXY, and the Federal Reserve balance sheet to compare it against Bitcoin. This gives us a way wider perspective of where we are in the cycle, and I'm gonna try to keep it concise but find an answer for whether we have already complete the cycle in 2025 or if there is a chance we're gonna try to sneak into the future and understand what are the odds for us to really get a Q1, Q2, a 2026 fifth year of cycle incoming. Just for context, I want you to first see where we are in regards to all the other things. CBBI is a great indicator and at the moment is marking 70. This one tracks not just TA but also on-chain analytics, and you can see that every cycle we peak around the CBBI index being at 99. That's what we did in 2013, that's what we did in 2017. Even in 2021 we managed to get just to 96, but somehow this cycle every peak manages to just hit 80 and not get crossed past that, and that is creating, psychologically speaking, an effect across all investors that we still have some lemon juice to squeeze out of this asset. You're gonna see across social networks everybody saying, are we really gonna end the cycle like this? MACD histogram still doesn't cross the zero line on the monthly, this on-chain here analytic, that on-chain there, or TA or whatever. There is no euphoria, something lacks. So it's natural that we are thinking, is it ended or is it gonna really extend and the 5-year is just about to happen? And by the way guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And if you do like me to do this dedicated analysis, not just the daily swing trading as well in dedicated videos, make sure that this video gets 1,000 likes and as many comments as possible. Now I'm gonna start with the first ratio chart. This one is gonna be the only one I do it in the weekly, and it's against gold. Gold did something unthinkable this week, which got rejected from 4.4k and got a retracement all the way to 4,000. And since we are dividing in here Bitcoin by gold, obviously it's gonna have an effect in the chart. But we need to look at all the times on the weekly where Bitcoin was rallying against gold. That happens the first time in 2010, we got a rally, then we lost that level and we enter a bear market, right? Then we have another rally in here. This is a double top in the cycle, top number 1 in 2013, top number 2 again by the end of 2013. That is the actual top with a bearish divergence. In 2017, this is the perfect cycle, right? Only up, blow off top, and then the bear market that finally capitulates in 2018. Then 2021 is the bad boy because we have COVID, then we have to put the line like this, but all of them eventually break down against gold. That is kind of the must. You enter a bear market when Bitcoin cannot hold against gold, at least up until here. Up until 2022, that is the main pattern. There is no exception. And if we focus on what's going on in the bull cycle in here on the weekly time frame, we can see that we lost this and we went for 2 rounds of revenge rallies. Rally number 1 in May 2025, rally number 2 in July. But that revenge rally against gold put a new all-time high on Bitcoin, but it couldn't put it against gold. We got squashed at 35 in the ratio, and we are also squashed against this double top. We managed to conquer it in here and then we got rejected. Now in July we got a rejection from something that looks like a liquidity hand with a breakdown below the trend line. So if I wasn't looking at this, if I don't care about seasonality, about gold that put an all-time high, what's going on with the macro and anything, just looking at the chart, I will say the most likely scenario is that this guy is going to continue, take the low of 25 and continue to the downside. I'm I'm sorry, that's what the chart says in an isolated way. You are watching this channel because you want that sort of honest and strong analysis. If we do now a step up and we go against gold, but we do it in the monthly, just to take out of the way all the noise, even do a logarithmic like this to see every time that Bitcoin is holding the support against gold. Where are we right now? We are pretty overextended. We hit that level in January 2023, and then we rally all the way to the top on the monthly. That is the level that we cannot conquer. So on the monthly, there is some sort of wick outside. There is no candle close above it, so it's still kind of a liquidity hunt in the same area. And that is at the moment threatening to, again, break that support around there. Whether you put the line like this and it's a retest already done, or you put it like that and it's the first breakdown, but there is a breakdown, right? Now, let's see what the momentum has to do, which in my opinion has a lot more to do than just the naked price. If we look at the momentum in here, first cycle, breakdown, tiny microscopic retest, let me show it to you. That is the retest. Pinch below, up and down, right? That's it. Then next cycle, breakdown. 2021, sure, breakdown, revenge rally, rejected, go into the bear market. So where are we here? Well, a few months ago, the last time that you and me were looking at this chart, we say now we are back to the scene of the crime. We are right there in the revenge rally at 61. What are the odds that Bitcoin is gonna expand into 2026 in Q1 and Q2? What are the odds that it's gonna take all the cash that is coming out from gold? Well, to do that, I would have preferred that we retake 62, that we retake 65, and that we rally into the top, into 81. But instead of that, we put now a new low at 49. So if gold now starts collapsing decently, and I talk about going to 3.5 or 3.2, that is going to push this bad boy that is currently in the move. The previous settled candle is 53. That's a higher low. This one is in intra-candle move to 49, that if gold crashes and Bitcoin goes up, it can close, technically speaking, like this. And that is a different setup, right? That is a setup I like. That is the setup of a double bottom formation that could potentially challenge 61 and then from here go to there. We can do it, okay? I'm not saying it's impossible, but October has a massive responsibility. October, do not mess up this. October, do not close this monthly with a lower low in here, because you're gonna make it so much more difficult to really achieve what everybody's expecting out there. That is an automatic. Everybody says, yeah, gold is correcting, we're going there blindly. Yeah, here I am, sell gold, buy Bitcoin, whatever. No, you're not that dude, right? You're subscribed to this channel. You are here to really understand what's going on. Let's look at Bitcoin against VIX, because VIX could expand soon. Of course, if VIX expands into a higher valuation in the index, then that can push this even lower, right? The ratio and everything. So we need Bitcoin to push higher without the VIX expanding. We have to tell VIX, hey, hold on there, do not expand, do not get too overheated with volatility. And that makes a lot of sense. If we want to break out in here and produce what we couldn't do in the previous cycle, right? Which is from here, from the bull market, still at the highs, push and create an all-time high. We couldn't do that. We are here extending the third touch as much as we can, and possibly we get a fourth and we still don't break out there. So there's nothing confirmed against VIX that we have it. Can we still do it? We don't know. We might get into resistance of 53 and put a new low there and continue with the plan, letter by letter, writing the book of we are just going into a bear market just like we did the last time against the VIX as well. So gold, VIX have a tough next set of things that need to happen. Do you think Nasdaq makes a difference? Let's watch it together. If you want to trade Bitcoin, if you want to trade this, consider opening an account on Bluffing. Claim $3,000. No matter how much you deposit, you get always some rewards in your account. This is active until the end of the month, 30th of October, so you still have time, and the link is in the description. You have to use it. Do not leave this cash on the table. So Nasdaq, very important because Nasdaq is representing everything to do not just with tech, but also higher risk. So we have BTC that is higher risk together with Nasdaq, both in a single chart. Let's see what it says. So I have found personally that there is a slope that has remained the same slope, unless I'm completely crazy, on Nasdaq ratio chart. That applies to 2021 past cycle. We got stages 1, 2, 3, and 4. We are at the moment potentially in the fourth stage. What is the fourth stage? The fourth stage is constituted by a breakdown of the support of the whole bull, being below it and approaching it in a revenge just to get kicked back down into a bear market. That is 4. Where are we here? Oh, wait a second. That happens also against the resistance of the downward sloping trend line. And that one there, that bad boy says, hey, 48K Bitcoin, go to hell. You're now going to 15K, enter the bear market, and then we speak later. That's what it did. And then the breakout happens in October 2022, prior to FTX. But you get what I mean. That line, that slope anticipates all the highs, 1, 2, 3. And we start already initiating the area of bearish divergences. Just like this downward sloping, there is one in here. And I've been calling at the most optimistic targets is to get into that 69 or to get into the 66 if we could do a rally against resistance. But now, guys, we need to pay attention to this bad boy because it's losing the whole bull cycle support. According to this slope, if you believe in my slope, this should come back down in here and come for a revenge into 485 in the ratio. And that is too much looking like this guy here. And the only exception on the Nasdaq is if the RSI comes back into 66 and it breaks out, right? So you are in an area where the rotation of S&P into Bitcoin might be around support, right? That sure, but the upside in here might be a little bit constrained in case you actually get the rejection there. So if we get the breakout, happy days for Bitcoin. But if we repeat that now based on past performance, we are very close to being in the edge of a cliff against the Nasdaq. Next one, are you ready? Are you ready for the dollar? This is a big one as well. It's gonna get intense. So dollar got rejected from support. Dollar happens to have somehow a support previous cycle, and that support sends you into the bear market. Now, where are we in here? We already broke out, fake out to the upside on this ratio. We got a hidden bullish. We went back into resistance of 64. So we are similar to this area there. The only caveat, which applies also to the price without the ratio, is that this 48, right, is a lower high relative to that, okay? In here, we still don't define this horizontal line, and we are coming straight from the all-time high, straight, right? So we are kind of in a hybrid. We are in this area, but from the momentum point of view, we are in this area. We are in two places at the same time. It's like quantum computing situation at the moment for Bitcoin. Well, I shouldn't have said that. Quantum is kind of poison to Bitcoin. Anyways, so we are kind of here, but we are also still around the area above the support. So I think dollar has a lot to say now, because if dollar goes into 105, if you watch my general markets video, you know what I'm talking about, then there is a chance that this is going to come even lower. So Bitcoin needs dollar to break down or to stay below $100 and to rally thanks to that. So it needs dollar to get rejected, and ideally it needs dollar to break the multi-year support too. Tough one as well, very tough. And the Federal Reserve balance sheet has a completely different behavior. As you can see here, it's got these areas of breakouts with a squeeze that the slope starts to get more sharp. You got 14 here, then you got a more pronounced slope, and I haven't looked into this one, but possibly it's even sharper. Well, it depends. If you touch actually the all-time high, then it is a bit more pronounced, but it's in a similar place, right? There is a breakout in there that got into a fake out. Relative to this one is way higher, but it's looking like it's very extended as well against the breastfall. If the Federal Reserve balance sheet in here breaks out bullish because they add, that's also going to push the momentum on the ratio lower below the support. Being below the support is the area of the bear market. So it's very tough. I will say that there is, across all the ratios, a little bit of doom in at least the way I'm interpreting the charts. And I'm just a human being. I don't know where price price is gonna go, and I'm not gonna use the fact that this is more dangerous to not take a long and do some swing trades here and there and approach it with high risk. That is the only takeaway I have. There is some risk, additional high elevated risk, 10 times more than entering in here. We were already looking for longs like crazy in this area. Now I'm looking for shorts a bit more frequently, and my longs are a bit more chickening out in terms of size, and on placement of any DCA order right after that needs to be taken a lot in consideration. I hope you enjoyed this video. I hope you have some takeaways. Write them down in a comment, hit the like, share this video with your friends, share it with someone that is suffering from FOMO syndromes, someone that is a short-term holder that is currently holding a red bag, not to sell it, but to understand where we are a bit more in the market. I hope you have a great rest of the day. I'll see you on the next one. Bye-bye.